Hey folks, this is your host Mandeep, and in today's video, I'm going to extend the concept that I started to discuss in my previous video. In my previous video, I talked about the various sectors inside of the S&P 500 and how a good understanding of the S&P 500 is essential if you like to day trade or trade on short-term basis. Now, what I want to do in today's video is take that concept and extend that to a concept that I call as the sector rotational model. And, I'll show you a little bit about the sort of math behind it. And it's actually quite straightforward. And I didn't do it from scratch. I basically took an existing study inside of Thinkorswim, which I'll show you. And then I just made some extensions to it based on what I think the right way of doing it is. So as you can see on the very top, we can see, the various S&P 500 sectors. And I mentioned this in the last video, there's 11 of those. And in this case, you can see two things, right? You can see what is the weightage of that sector inside of the S&P 500, and then what is the change? And this change that we measure in here is actually from the open of the day, right? So from today's open to today's close, technology sector went up by a low $2, and healthcare went down, and consumer discretionary was up by 96 cents, so on and so forth. And I also mentioned that it's important that you understand what the weightage is, right? So, for example, energy has a very small weightage inside of the S&P 500. It used to be a big component at some point in the past, but that has changed. Now, technology is the biggest component, and of course, you have things like consumer discretionary, you have the communication sector and the financial sector that are the big sort of components inside of the S&P 500, right? So one of the things I did was look inside of the Thinkorswim, and I stumbled across a study called the sector rotational model, right? So if you click on it, and whenever it is locked, that means you can't edit it, but you're allowed to create a copy of this and modify it. So in this case, they take the bull case scenario with the consumer discretionary financials, and bear case with energy, utilities, and XLP. While I agree that utilities and the consumer staples are defensive, but energy is definitely not in the defensive sector. It's more the part of the offensive sector. It's like more of like risk-on kind of trade. So anyway, so I've made some adjustments to this model, and I came up with a slightly different study. So in my case, of course, as you can see, I have seven sectors that are part of what I consider as the risk-on trade, right, or the offensive sort of stage. And then when you're more in a defensive mode, then you're in a different set of stocks, right? So clearly, when you're in the risk on, you're looking at consumer discretionary, you're looking at financials, technology, industrial materials, energy, and the communication sector. And when you're in a risk-off trade, you're looking at real estate, the utilities sector, consumer staples, and the healthcare, right? So what I also did was, since we'd already talked about what the weightage of each of these components is inside of the S&P, I've actually assigned that weightage to each of these sectors. And based on that, it comes up with an histogram, which is what you see sort of at the bottom here. And I'll make this code available as part of my description. You can download it from the website. It's nothing but really an extension of a study that already exists, right? So now let's look at a couple other things, and what I'll try and do is I'll minimize this so we can look at the entire screen. So I'd marked out a couple areas, right? So this was like an area that I marked out was essentially a penalty box, right? Because the NDX or QQQs, right, were trading inside of this box, right, for some reasonable amount of time, and you had to wait to see which direction it broke. And when it broke sort of in the downside direction, then I'd identified these two gaps, right? There's a gap that was formed here, and there was another gap that existed here. And sort of my notion was that at some point in time, these gaps will get filled. And as you can see, in the last 2 days, those sort of gaps got filled. The other thing I was looking at was also, like the Fibonacci retracements using the most recent high and low. And I'm only interested in the 61.8 and the 50%. Now that we're done with these, we can actually remove these studies, remove the rectangles, and since I actually didn't do it properly, so I'm taking care of that, and I'm going to remove the rectangle here as well, so remove the drawing, right? So what we are left with was like these two retracements, right? And one of the things that happened today, interestingly, is that we did sort of drop down to the 50% retracement, and from there we bounced a little bit. Now the rest of the stuff that you see, those are some Gann square of 9 retracements, and that unfortunately is only available inside the Discord room to members that I have. And basically these also end up being support and resistance point, right? But anyway, for now you can just focus on two things. You can focus on like the 50-day SMA as well as the retracement. So the thing that you notice is that as the market bounced back, it really stopped at the 61.8% retracement as well as the 50 daily SMA as well, right? So now the thing to watch tomorrow is that whether we start to break back above, and I think if we break back above, that creates more of a bullish environment. But if we if we cannot push back that, then I think the market may pull down some more. But that nobody can predict, right? You can just follow these levels and then take action once that thing happens, right? Now let's just go back on a more granular time frame, and let's just look at the 10-minute time frame, and you'll start to understand or look at the sector rotational model in a slightly different way. So as you can see here, right, so everything sort of went into more of a defensive mode today as the histogram turned negative. And interestingly, what you can see is that you had a little bit of a clue of this happening even around noon yesterday Pacific Standard Time, right? So about the last 1 hour or so, you can see the sector rotation model had turned into a risk-off kind of a trade, right? And of course, the UTS that we use, the ultimate trading strategy, was already short from a little bit before, and then of course it closed the trade. Then we can right click and see the actual trade that happened. That was sorry, this is NDX, so let me switch back to the Qs so we can see that. And it'll be exactly similar, and now we can look at the actual profit on this one. So it generated a profit of $544, right? So net, it's up $1,800 in 20 days, assuming 100 shares of trade, right? Given wins and losses, right? So again, here you can see something similar as well conceptually, that you were in a more sort of risk-off kind of a trade. Nasdaq was generally sort of trending downwards, and right around here, even though it was trending down, you could see a little bit of a divergence beginning to develop, and then that turned into like a buy here, right? So we went in from a risk-off trade to a risk-on trade, right? So I'm not saying that this is like a holy grail or anything, or I found something that that nobody has ever discovered before, but perhaps I'm just looking at it from a slightly different perspective, right? So each of these data points that I give you or share with you, just take them as like one data point, right? So none of them in itself is a holy grail, right? But when you take all of these pieces of information together, then you are basically stacking sort of the probability in your favor. So again, like if we extend this a little bit, you can clearly see that once we hit the 50% retracement right here, right, we bounced off of that, and the market ended up moving up for most part of the day, and finally closing very close to the 50 EMA, 50 is SMA daily, as well as the 61% retracement line, right? So when you have a couple of these sort of getting aggregated around the same line, you got to pay attention to it. And also you can see the sector rotation is still sort of on the negative side. So you can wait and see, if this starts to turn positive, then you can, take on a little bit more risk. But also remember, all of these are going to be lagging a little bit, right? So think of it like as a large ship, if it has to change direction, it's much harder for it to change direction versus sort of a speedboat, right? So it's the same thing. These will lag a little bit, but overall, if you go on a higher time frame, you can, start to look at it and see what's happening on a 30-minute time frame. It's still negative. But if you look at it from a daily time frame, this probably is still positive, right? Because really it hasn't dropped very much, right? It's just a small retracement as of yet. So hopefully this helps, and I will see you guys in my next video. Bye-bye.